What is an accounting equation? The accounting equation is assets equal liabilities plus owner's equity. Examples of assets include cash, land, and equipment, whereas examples of liabilities are accounts payable and notes payable. In short, this is everything we owe. Lastly, an example of equity is capital. When adding an accounting title to one side of the equation, one should always remember that it should be equal to the other side of the equation. Try this example. Alex purchases 500 pesos worth of equipment from Mercury Drug. When we interpret this, the account titles involved are cash and equipment. Your asset will increase in the form of equipment, so we add 500 pesos on the left side of the equation. In turn, you also decrease your assets from cash. Because of this, the two values will cancel each other out and the equation will be balanced. Let's try something more complicated. Andy purchases 3,500 pesos worth of items from Nike. She pays for 25% of the amount due while the remaining balance is to be paid later. In this transaction, assets increases by 3,500 pesos in the form of equipment. Assets in the form of cash will also decrease in the form of cash by 875 pesos since this is the 25% which has been paid for. On the other side, liabilities will increase in the form of accounts payable. Here, we will put the remaining amount due, which is 2,625 pesos. If we compute for the values of both sides of the equation, we will see that these are equal to each other. Most of all, it is important that the income statement, which is the summation of all assets and the summation of all liabilities plus equity, will be equal to each other. This is important because while account titles and transactions may be equal to each other, the final outcome statement may not. Through the use of the accounting equation and proper knowledge of this, companies are able to properly record their transactions. Whether this is balanced or not will interpret whether the company is doing well financially.